Yo, what is up? ADJ Trades here, and today I'm gonna talk about what liquidity is, how to spot it in the market, and how I use it to take a trade. So, if I pull up a blank chart here, essentially what liquidity is resting money in the markets, because everyone knows the market can't just keep going up. It has to come down, collect money from stop losses and limit orders in order to keep going one way, because the market runs on money. So if we have for example an uptrend here with higher highs and higher lows, resting liquidity would be at these lows. Because let's say Mr. John took a buy trade right here in the trend, his stop loss would be right there, and that's where the liquidity comes from. It comes from people's stop losses and people's buy orders. So what you see a lot in the market is the market would come down, sometimes aggressively as well, take out go below these lows, and then keep pushing up higher than it did before. And that, what some people like to call, is a fake out or manipulation. I like to call it a Jewish fake out, because that's what the market makers, the Jews, they like to take other people's money so they can actually make more money, buy cheaper prices, and yeah, that's pretty much what it is. Let me show you an example in the markets. So as you can see, gold recently has been just booming off, and obviously it can't keep going up infinitely. So as you can see, it's already starting to make its way down, and what gold will most likely do is want to collect lows. For example, any of these like black candles formed are lows. If I use the arrows, you can see it more clearly. But yeah, these are all points of liquidity which the market will eventually have to come to, at least some parts, to collect money to keep pushing up, because it can't go up infinitely, like I already mentioned. So that is what liquidity is. Pretty simple. It's just resting money in the market, which the market has to eventually take. Now, not all swing highs and swing lows actually will get taken out. For example, like this never got taken out. It's probably never gonna get taken out. But not all swings get taken out. That's why you gotta be wary of when you enter and how to really establish a point of liquidity. So how I like to enter a trade is, let's show on the S&P right here. For example, on the hourly time frame, as you can see, on Monday there was a big news candle which made a huge swing high, and this is resting liquidity. So let's say people put a sell order right here, whatever. Where would the stop loss be? It would be right here. It would be right there. And what you can see the market did, it manipulated to the upside, literally wicked out that high, and then dumped all the way down here. So what I did is I waited for this liquidity sweep. Normally on a higher time frame, I like to wait, for example on the hourly or the 4 hour, I like to wait for a liquidity sweep. Then off of the 30-minute, I saw, what was it? Yes, right here, I saw a inverse fair value gap, and I just entered off of that on the 30-minute. What I like to do is match liquidity sweeps with with other confluences, for example, fair value gaps, inverse fair value gaps, break of structures, and this is more likely to go in your favor on the higher time frames. Now, when you trade with don't watch that. When you trade with liquidity sweeps, it's a higher percentage of a trade because there will be more volume, there will be more volatility. I'm not sure that's the right word. There will be more volume, and there will be more money in the market which you can collect from. So that is pretty much it. Resting. Let me show you a couple examples right now. For example, the market is here. I'm pretty sure you can establish where resting liquidity is. There's resting liquidity right here, and there's resting liquidity right here. As you can see, there's been a liquidity sweep already right here. You can see it because it went down and actually wicked, and then it's starting to break up. That's how you spot a liquidity sweep, because sometimes the market can just run straight through and then keep going down, but that's not a liquidity sweep. But this is more likely an actual liquidity sweep, or an actual price manipulation, because why? The market is starting to break back up and will probably keep going up based off this added money in the market. So that's pretty much it. I hope you guys understood that. Please like, comment and subscribe. Stay blessed, stay profitable, and comment any questions you guys might have. If I wasn't clear on any topic, please let me know down in the comments. I'll be happy to answer any question, and I'll see you in the next video. Love.